Hello, good afternoon, everyone. Welcome to the day 17 of our 60-day trading challenge. And today was an exciting day in terms of the market moving in a roller coaster manner. It was a good learning in terms of if you go through the trade details. Trading, once you're in the trade, how the feelings would be is, only when you look at the charts, when you are in front of the screen, you will get to see or rather you will get the experience of that. But however, I'll try to give you the perspective of how the market moved and how one would feel if it was a manual trade. In the sense, not or rather, I won't call it a manual trade because it is again a manual trade what we are doing, but it is a if it is a discrete trade, it is going to be difficult. So it is a rule-based trade here. So we had a clear-cut rules and regulation for the entry, exit to stay in the trade, and that helped us. To a large extent, or even though it meant a very nominal loss at the end of the day. Again, as I always say, P&L is not the focus. The learning and the stay put with the trading rules is more important. Cultivating that habit is more important. Is what I'm it is all about that initiative which I'm driving through this 60-day trading channel. So let me quickly walk you through the trade details. So this is a Nifty chart, as you see here. This is a Nifty chart today. So the day started, sorry, somewhere here. I would put it as here somewhere the day started. And for most part of the day, it went up, it came down, and again it went up, it came down, and sharp. It went up, and then it closed at a high of the day. This is a Nifty chart, but as if you somebody see looking at this chart, okay, it opened at at certain point and then it went down. That is true for a positional trade, but not for the intraday. So intraday, if you look at this chart, the option chart, basically, which we sold again like yesterday, the 23,000 put of next week we sold. Our trade came around 9:45, at the closure of 9:45 candle. So 9:45 candle is this. This is the candle at which we took the trade, and for a short while it went in favor of our direction. But as you see here, sharply it went. The market went against our trade, and our initial stop loss was 107.7, and it went all the way to 104.25, just about 3-4 rupees away from our stop loss, and we survived because of that well-defined stop loss level. And it came down, but it never, for the most part of the day, it is still remained above our entry price. But at around 2 o'clock, that is 155 candle, which closed at 2 o'clock, it indeed started going down in favor of our direction, and then it made at 130. Sorry, this was a day low. 215 candle is the day low. Based on that, we shifted our position, trailing stop loss. But of course, before that, this was the day low, and based on this we had already started moving the stop loss to the 50% of the day low, and then the last reference we had taken was on this candle. So it was the day low was basically, if you look at it, as 65.5, and based on the 65.5 we shifted our stop loss to 98.25. Again, it did not hit the time based trailing stop loss also, but the fun part is we had to end the trade at 3:15, right? Like it's an intraday trade, and as per our strategy rules, and as also intraday trade has to be closed by 3:15. We exited just above our entry price. That means we booked this nominal loss. But again, the post that again it went in our favor. Had we could have stayed in the trade, it would have still ended in the green. So the whole part is like withstanding this kind of a movement was just possible because we had a well-defined rules. But if it was emotions was to play, we would have exited somewhere. We would have got panic here. Surely we would have got exited, And again, we would have been happy here. Okay, some losses have reduced. And when it started going up again, we would have again panicked and we would have exited somewhere here at a higher losses, and various things could have happened. And believe me, it is just because of the 60-day, sorry, the rule-based trading we follow. We were able to sustain all those emotions, and then we could stay put with the trade. So just again going to the trading journal here. So we sold 23,000 put like yesterday also the same instrument, but today the already the prices had come down to 71.75 in the morning at 9:45, and then closed the trade at 73.65. So if I show you the 23,000 put trade, and maybe I will product MIS. So we sold at 9:45. The 71.75 is the our entry price, which was at 9:45, and and in the afternoon again at the just before the 3:15 time we closed it. So at 73.65, and here is that the trade details. 71.75 entry price, 73.65 is the exit price, and as you see here, 56.78, that is 56.80 is our trading cost. So we lost about 199 rupees or 200 rupees, you would say. And the learning part is emotions, and learning part is captured over here. At the end of the day 17, we are at 4.87% ROI, and we are now nearing the a month away, like the 1 month of the trade. But of course, another 3 days, because tomorrow is the only trading day in this week. Again, Friday is a holiday. So so that means 20th April is a Sunday. That means by tomorrow we will be completing the 1 month. But of course, we will go by the 60 trading days. But from a calendar perspective, tomorrow will be the first calendar month closure of the 60-day trading challenge. And at 4.87% in the first month is reasonably a very good return, I would say. But again, return is not the focus. I never want to emphasize on the returns, but more on the stay put with the trading rules, the well-defined rules, and just we need to follow and practice the rule-based trading. So that's all for now. Thanks for joining today, and we will see you tomorrow for the 18th day. Thank you. Bye bye. Take care and have a good day. Bye bye.